Let's dive into American-made crypto ETFs today. We're going to have a great guest for you. You don't want to miss it. My name is Paul Barron. Welcome back into the show. I do want to thank our sponsor today, and that is iTrust Capital. This is where you guys can get a crypto IRA. It's built around you managing it. Very easy to set up. All you have to do is visit itrustcapital.com. You can get over there, put Bitcoin, Ethereum, all sorts of altcoins. The cool thing about this is it's managed by you, so you're the one in charge of your own IRA. You can also do gold and silver over there. And you're going to join a lot of people on the iTrust platform, over 200,000 accounts. They have been out there absolutely killing it for quite some time. So again, just check out itrustcapital.com. You guys can get to it. All right, I have Steven McClurg coming in from Canary Capital. He's been on our show before. Steven, how are you?
Hey, great. Good to be back, Paul.
Hey, yeah. Okay, so a couple of points that we want to get into today. And I think that is the movement of what you guys, first of all, congrats. You guys have been filing ETFs left and right. It feels like you've been busy. Now you have an American-made crypto ETF filed. Tell me what you guys are looking to do with this.
Yeah, I mean, not really addressing the ETF directly, but the theme that we really like right now is American-made crypto. There are several protocols as we speak that are looking at repatriating their treasury that in a lot of cases are sitting overseas. So there's been years where they've tried to get outside of the US, stay outside of the US, and now they're all bringing it back. So I believe under this administration that American-made cryptocurrencies and American-made blockchains are really going to thrive. So, we're trying to, really follow that theme. There's even been talk about tax advantages. I don't know if that's going to happen or not. But I do believe that there is going to be a significant upside for crypto here in America.
So, okay, you're mentioning some interesting points here. Repatriating treasuries into the United States. That tells me that most likely there's conversations going on with the administration and David Sachs with a lot of these protocols out there. Your Friday filing said the proposed fund would track an index of cryptocurrencies created, mined, or primarily operated in the United States. Does that mean that the Treasury has to reside here in the U.S. to be able to qualify? What are the qualifiers, I guess, for your ETF?
Well, we would follow an index, so that index would have its own requirements. So, we don't really comment on how that index is managed because it's a third party. But generally, if you think about the way that we think about American-made crypto is either a majority of the team is here, they built it here, or they're managing the protocol from here.
Yeah. Okay. Well, that would make more sense. So what makes you think they're going to repatriate funds? Some of these treasuries. Have you heard this?
Yeah, I mean, I've had conversations with several foundations that are, currently offshore, whether they're in Switzerland or Singapore or Malta or what have you. And now that they feel like it's safe to run a protocol or a blockchain under this administration, they're looking at bringing the capital back over here because the reality is they use that treasury to fund projects that are mostly in the U.S. So it's a lot easier for foundations to operate out of here and operate their treasuries out of here.
Yeah, well, I think, and if we look at market structure bill, which could happen in the next few months, leaning into what's going on in DC, that of course starts to change things as well because it starts to open up a lot of opportunities for even the Fortune 500. General business will most likely get involved in that. So I would agree with you. We're going to see a lot of activity. I'm looking at Nate Gerassi's tweet right here. All the crypto ETF filings right here. Seifert from Bloomberg did this. I think it was 96 on this chart. And here is my question to you. You are one of them that is in this chart right here. You, of course, have a handful of ETFs. And, of course, you have the Ripple. I think the most, maybe the most famous ETF is the Ripple filing for Canary. What is going to make Canary a go-to place as a resource for an ETF, for an investor coming into the market and wanting to go that direction?
Yeah, look, when I was in a previous job at Guggenheim, we were a very small shop, but we were kind of known to be experts in what we did, which was asset-backed securities and structured products. And we would go head to head with firms that were sometimes 10 to 50 times bigger than us. And when people choose firms to go with, usually they choose one big famous one that nobody's going to lose their job for choosing, like a BlackRock, and
Yeah.
then they choose an expert. So what we have on our team is really an expertise in cryptocurrencies. We do have a very strong traditional finance expertise as well, but we do have. I mean, we're deep in the space. We work very closely with protocols. We've got a fantastic team. So we know a lot of we know a lot about what's going on, probably better than anybody else does, and that's why
Yeah.
we're able to really dig into some of the lower market cap plays for some of our filings, because we understand those protocols, and we know what's good, we know what's not, and I think people are going to look for us to show them that.
Well, it's going to open up a lot of opportunity because of the structured capital flow that most likely is going to be coming quickly into this. The Ripple ETF or XRP ETF approval odds right now on Polymarket hovering at around 86%. So one of its highest points, but it looks like this is going to happen. Almost everybody I talk to, the Bloomberg guys, everybody's kind of pointing that this is going to happen. What is the likelihood of the timing for this right now?
Well, the first answer is I don't know,
Yeah.
because it's really sitting with regulators. But if I had to guess, I would guess that XRP would probably be this year, along with Litecoin, possibly HBAR, Solana. Those are the ones that I do believe will occur in 2025. There's several others that won't happen until 2026, but I mean, the information that I get that off of is the generic listing standard that's currently under review. And if you just look at that generic listing standard, I think either Eric or James from Bloomberg simply said, well, if there's futures at Coinbase, then you probably get an ETF in 2025.
Yeah.
So
Okay.
I think that's a really, really good standard to look at. And then I do believe that it will adjust over time to include a lot of other things. So, and again, there's a lot of ETF filings out there, but you got to think that 10 of them are basically Bitcoin, 10 of them are XRP, 10 of them are Solana, 10 of them are ETH. And so that really takes the bulk out of it. There's a lot of issuers going after this. So we'll see who
Right.
wins.
Well, and I'm looking at also Gerassi's tweet, 300 million in inflows on spot ETFs now, 1.2 billion for the week, 4 billion in August. This is on ETH. So this could approach 10 billion since July. You and I had this conversation on our XRP podcast, very specific about what that could look like. Your statement at that time was 5 billion in the first month. Are you still holding to that? Do you think that's a possibility?
I really am. And again, it all depends on macroeconomic factors and what's happening in the market. That always changes
Yeah.
things. But I would say after Bitcoin, XRP is probably the most well known in on Wall Street and on finance circles, and then ETH is actually probably number three. So if you think about it that way, I do believe that XRP could potentially outperform ETH just from pure financial services standpoint.
No doubt. All right. With that being said, you mentioned macroeconomics that play into this. July PCE data, the Fed's preferred inflation, rises 2.6. This was in line with what expectations were, around 2.6. Core PCE 2.9, also in line. Many people were still expecting this to kind of push. So rates now, people still anticipating that a Fed rate cut is still coming. Do you think September will be a Fed rate cut? Do you think we'll get it?
I do. First of all, I'm going to say that the Fed should cut the Fed rate, and it should have happened a few months ago.
Yeah.
But I do believe that they will finally in September. I do believe there'll be one more in October. December's anybody knows right now. But what I
Yeah.
really believe that the Fed should be doing is not only cutting short end rates, but also selling off securities from their balance sheet with longer maturity, because we actually don't want the long end of the curve to come down. We only want the short end to come down. Right now, I'm getting rewarded more for taking risk on 1 month paper than I am for 10-year paper, and that is not great when you're an investor. You want a yield curve that's normal, not one that's inverted.
Yeah. Well, and if you look forward, Stephen, and compare what will happen maybe here in this last quarter to what could happen with a new Fed chair coming in, you've got Christopher Waller announcing he will support an interest rate cut. He's one of the Chris's that are under consideration. But if you look into 2026, now with a new Fed chair rolling into it in May, what do you feel like that environment's going to look like on the first half of 2026?
Yeah, look, once Powell is gone and there's a new chairman, it truly will probably be a little too accommodating. There's a balance, right? I think Trump has been calling for about 3 points of rate cuts. I'm calling for maybe 1 point, but with wait and see, because we don't want inflation to get back out of control. We want
Yeah.
housing prices to come down. But the rest of the market obviously loves easy money. And of course, politicians love easy money because that's what gets them reelected, the economy. And if the economy is bad, it's tough for a party or officials to get reelected. So I want to see a balance, and I hope that we see balance in the new chair. I hope that they don't accommodate so much that we have rampant inflation and high prices again. But I don't know what's going to happen there, and I assume they'll probably cut a little too far.
A little too far, overage, as they say. Looking at Ethereum and what's happening with a lot of these ETH Treasury companies, BMNR now gets a little bit of attention from Cathie Woods. I know you would. I know you are aware of everything that's happening there on the street. But this starts to move things in a big direction, at least for Ethereum. Do you think the ETFs can compete with what's happening with these treasury companies in terms of institutional capital inflow? Because that's Cathie Wood right there.
Yeah, no, I really do. I mean, there's going to be people that cross over and do both, but for the most part, you're going to want people that want pure play, right? So if a lot of retail investors a lot of them want pure play. Some are going to want some of the bit of the leverage play that the treasury companies or the DADs offer.
Yeah.
And then when you look at financial advisors outside of MicroStrategy, I believe they're going to want a pure play too, because how can they explain to their client? They're like, well, I'm going to put this company in your portfolio that has a failing pharmaceutical company, but guess what? They've got a lot of ETH on their balance sheet, so that's why we're buying it. That's really a complicated conversation, and financial advisors don't want to take that risk.
They don't like that. Yeah, I would agree. Which makes it, the ETF a little bit stronger vehicle in that, unless you do get some of these companies that kind of go in that direction. I'll play a clip for you. This is Cathie Wood talking about versus ETH ETFs, in fact. So listen in what she had to say.
There are all kinds of problems when 40 Act funds buy another fund, another ETF to gain exposure. There are tax issues. There are fee issues, bad income. If those profits, gross profits, this is gross, there's no netting here. If those gross profits are more than 10% of the total profits generated in a year of a fund, the entire fund can be shut down. The tax benefit, you'll basically you'll lose a lot of tax benefits, and you'll be subjecting the fund to a great number of fines, if not actual shutting down. So we can't take those risks. This is the first time we've been able to gain a solid position in Ether. And, sure, it comes at a premium, but what's different from Bitcoin treasuries, like MicroStrategy, now Strategy, is there's just more utility that these Ether treasuries can offer, staking being one of the most important ones. The ETFs, at least not yet, do not, the Ether ETFs are not allowed to stake.
All right, so a few things to unwind there. Cathie's on the other side of your position, is that the exposure could come through the treasury companies as opposed to, and I wasn't aware of this Act 40. Explain to me what she's talking about there in terms of the ETF fund's profits.
Yeah, so well, there's two different acts that we should be clear on. The first one is the 33 Act, which allows for non-securities to be in an ETF, such as the Bitcoin ETFs. Most of the ones that we filed are all 33 Act, but a 40 Act is essentially a RIC. So that means a registered investment company. It's a
Okay.
registered investment company 40 Act because it holds a certain percentage of securities on its balance sheet, and you can be potentially deemed as a 40 Act company or a RIC if it looks like your activities are investment. And that's actually something that some of these treasury companies might run afoul of, that we've got to be
Exactly.
careful of.
Hmm.
Now, where Cathie's coming from is she runs an active ETF business, and she doesn't like the fact that she's an ETF investing in another ETF. That is problematic from
Yeah.
her standpoint, but that's not what most people's issues are.
Right.
Um, Going back, if I'm a financial advisor or even an individual, I prefer the ETF over the treasury company because an ETF has a very clear cut fee. So if you're holding, say, Solana and you're staking Solana and you're earning, 7% on the stake, and the fee on that ETF might be 1%.
Hmm.
So that is, you know exactly what that fee is. But if you're
Yep.
investing in a DAT, then that DAT is paying an asset manager to manage the treasury. And some of the deals that we've seen are anywhere between 2 and 5% is the
Hmm.
management fee on
Wow.
these treasuries. So that's something that people need to be aware of. And you're paying the operating cost on top of that of the operators of that publicly traded company,
So fees
CEO,
plus the
CFO.
operating
Oh, it's a
costs?
massive fee, you know.
Interesting.
Yeah,
Okay.
yeah. No,
I
there's so
love it
many
when we
hands in the
unwrap the
details.
onion here.
Oh yeah,
It's
no.
in,
There's some deals out there that are really bad that we've seen where some of the board members and the officers are taking massive warrants. The bankers are charging high fees. The
mm,
asset managers are 3 to 5%. And by the time, and what you're left with is probably like, for every dollar you put in, you're only getting 90 cents.
yeah.
Whereas an ETF, it's more like you're getting 99 cents.
Do you think that these treasury companies could be the unraveling of this market, at least this particular liquidity cycle that we're in?
The ones that aren't done right absolutely will. I do believe that the treasury companies, again, some of the ones that are really aggressive on how much they're paying themselves and paying their managers are going to be the next FTX. It's going to be the
Yeah.
next Celsius.
Ooh.
They're leveraging up their treasuries, and if there's a bad day or a bad year, these things are going to go close to zero.
Well, listen, we've had a handful of treasury companies here on the show. I'm going to start diving in deeper on these questions, because what you're bringing up is a completely different narrative here than what we've seen put out there in the market. So very interesting headwinds ahead of us right now. Speaking of that, seasonality futures positioning signals some crypto headwinds coming in. Bitcoin, ETH, obviously seasonality points to maybe a bearish September and a rebound in Q4. You look at Master, which is strategy, trading at a 1.42 NAV, MNAV. This is the value to their assets. For those of you guys, go out and search MNAV so you understand how these treasury companies work. But does this mean that maybe Saylor is he finally in trouble this far into this cycle?
No, I don't think he's in trouble in this one. MicroStrategy is a bit of an anomaly just because it's mostly at this point just Bitcoin, and
Yeah,
the operating company is very small compared to the rest of it, and that's covering a lot of their cost.
yeah,
But at the end of the day, the market is, and this is what makes a lot of these treasury companies inefficient compared to ETFs. ETF, there's a natural arbitrage that keeps you right at NAV on a daily basis, where some of the treasury companies, there's a lot of hype, and then
mm-hmm,
it can go the other direction. So that's just share
exactly.
price. It doesn't
Yep.
really affect the company itself, but it could cause a lot of pain for some people if the market begins to drop.
Yeah, this is what I'm most concerned about, because it feels like it's the most unpredictable right now in terms of the markets and how this might play. And remember, these are traders, guys. These are traders that are out there investing in this. They'll move off of an asset so fast. This is not a convicted community like what you see in traditional direct exposure to assets or even ETFs to a certain extent. I was looking at your tweet right here. Higher chance, this was in reference to a statement from Scott over at the Wolf of Wall Street's Tom Lee, 50% chance Ethereum ETH will flip Bitcoin in network value. Your statement was that the BlackBerry is going to have to come back from the dead for this to happen. So you're absolutely on the other side. Not going to happen.
Yeah, look, there's every time, at the end of the cycle, this happens at every time, every 4 years.
Flipping is coming.
ETH always gets a nice little rally. Everyone's like, oh, it's going to flip Bitcoin. No, it's not going to flip Bitcoin. Bitcoin has established itself as a currency and a strong currency. ETH is a protocol. It's a completely different thing. And there are so many other competitors to ETH for what it does that are faster, that are more secure, that are better. And look, price is something where, price can move, on the whims of humans, not based on any kind of fundamentals. So yeah, there's a possibility that ETH keeps rallying this year, but the reality is, as a protocol, people have moved on. Solana, SWI, Injective, these communities are moving on and building things on better networks. And there's still a lot of activity on ETH, but it's outdated technology. It's the BlackBerry and the iPhone is here.
Well, and I'm going to defend on ETH for a second. And of course, if you listen to what Vitalik is saying, their cycle of kind of revamping some of the tech, but it is a change in protocol, which would give them the capacity to be able to do some of the things that you're mentioning that some of these other chains are capable of right now. But again, ETH has a very good developer community, because when you track exponential growth, when you put the market structure bill into that equation, now you have a recipe. You have all regulatory framework that's, it's kind of like you're loose. When we started to see kind of the innovation in the internet, it was kind of done that way. If we see that happen and ETH is in the right place at the right time, it could catch that final wind and still take control of the market, and maybe, to Tom Lee's point, could play into it. So I'm on the fence as to whether or not that's possible. Too many things have to happen.
By the way, I'm not going to disagree with you. If you're in the right place, right time, your market opportunity is right, anything could happen. And that's probably more related to ETH versus other protocols. But flipping Bitcoin, I just, it's nothing's impossible, but I can't imagine a world where that happens.
It would take something. That would be huge. And if you look at some of that, 75% of stocks now, 3 and 4 of major cyclical sectors are now above their 200-day moving average. This is looking at sentiment in general. And this is in reference to something you and I have talked about, and that is, how long does this bull cycle last? Because we are really, guys, we are in a bull cycle. I know many of you think, hey, we got one more leg up. Maybe Bitcoin goes to 150 or above. ETH maybe goes to 8,000 or 10. But Steven, when you look at the cycle, because I understand your theory is that this is short-lived. How will this play out, in your opinion, as we end the year?
Yeah, I mean, for us, probably the highest probability event is a weak September and a strong rally in Q4. Not too far behind that is another probability where we really start rallying in September, October, peak out in October when the Fed makes the second rate cut, and then start petering out through 2026. Okay. So those are probably the two highest probability events. Either way, we're looking at that and positioning ourselves for that eventuality. And if you ask me today, that's what I say is going to happen. Things obviously could change. We could get a new Fed chair where rates go to 1%. If that's the case, then 2026 is off to the races. But in our current environment, based on the current Fed and current GDP and current economic growth, I'm still seeing a slowdown in 2026.
Hey, Steven, it's been great having you on today. We're going to be watching all your ETFs as they start to come to fruition. We'll definitely get you back on as soon as your XRP ETF is approved. I want to have you back on the show. Okay?
Great. Thank you so much.
All right, thanks for coming in. All right, guys, if you are not part of the Diamond Circle, you guys jump over to paulbarronnetwork.com. That is a brand new website. We've revamped it. It's called V2. We have a whole slew of new platforms over there for you, including our own crypto index, which we're measuring on 3 critical categories of crypto, and that is fundamentals, sentiment, and a composite score that looks at the top 50. It's called the BCI 50. Check it out over on Paul Barron Network, and of course you can hit that link down below to find it. Of course, follow me out there on X at Paul Barron. We'll catch you next time right here on the Paul Barron Show.